Hi guys, welcome to today's class. Today we'll be talking about trading strategy development, or you can say developing a trading strategy. What are the objectives of this class? I hope by the end of the class that you should be able to understand what a trading strategy is, differentiate or understand the different parts of a trading strategy, what a trading strategy comprises of. Then, important things you should note about a trading strategy. After that, we head to conclusions. What is a trading strategy? For one to be profitable in any business venture, you must first come with a business plan. This plan is the blueprint to how you go about executing your day-to-day business activities. A trading strategy is to a forex trader what a business plan is to an ordinary trader. Now, you must understand that forex is like every other business. And for a business to be profitable, or for a businessman to be profitable, first you must do a feasibility study. In this your feasibility study, you come up with a plan on how you're going to be running your business. This could include payment of staff, bookkeeping, advertising, a lot of other things you will need for your business. This is where you count the cost. You can forecast how much profit you're going to make in a year, in a quarter, and so on. Now, coming back to Forex. Forex is not different from every other day's business. A trading strategy is to a Forex trader what a business plan is to an ordinary trader. So, to succeed as a trader, you must first develop a trading strategy, which is also known as a trading plan. Now, some other books or some other trainers would also call it a mechanical trading strategy. Different parts of a trading strategy. A proper Forex trading strategy should comprise of the following: your approach to the market or a pair, a list of technical tools you will use to determine the best possible price to buy and sell a pair, your entry conditions, your exit conditions, proper risk management conditions or system, and a trade evaluation system, which I call the trading journal. Now, if you are to develop a trading strategy, all these parts needs to be in place for you to be a profitable trader. First, your approach to the market. There are basically two approaches to the market, which determines the type of trader you are. Those two approaches are the fundamental approach and the technical approach. The fundamental approach is where you look at the macroeconomic factors like the GDP of a country, the unemployment rate, the interest rates, and other economic factors that affect price of commodities or that affect the economy of a nation. Now, based on these economic factors, you can say that a currency is about to increase in value or depreciate in value when weighted against another currency. That is fundamental approach to the market. Fundamental traders basically listen to the news. What they do is they watch out for key news or key announcements from head of states or policymakers that could affect the direction of the economy of a nation. So I'm going to stop this at this point. We'll discuss it in full in the subsequent classes. A technical trader basically looks at the chart. A technical trader believes that everything that happens on the economy of a nation appears on the chart. So his concern is about what happens on the chart. He looks at the candlesticks, he looks at the chart patterns, he looks at a lot of other things that are within the confines of the chart. Now, there is a third type of trader which I like to call myself. This type of trader is the one that finds a balance between the technicals and the fundamentals. We'll discuss all this in details in the subsequent class. Now, a list of technical tools you will use to determine the best possible price to buy or sell a pair. After you have approached your market or approached a pair fundamentally or technically, you must use some technical tools, whether as a fundamental trader or as a technical trader. You must come down to the charts. Now, there are technical tools that help you decide what price you must buy or sell a pair. In the subsequent classes, we're going to be introducing 3 major tools that are used in determining where to buy or sell a price. Your entry criteria talks about what you will see on the chart, the conditions that are going to be fulfilled or the conditions that will appear on the chart before you make an entry, before you buy or sell a pair. Exit criteria. Your exit criteria talks about what you will see on the chart before you take profit or stop a losing trade. Proper risk management. Proper risk management cannot be overemphasized. If you must be profitable, if you will be profitable as a trader, you must have a proper risk management system. Your risk management system talks about how much of your capital you are going to be risking per trade. It also talks about what types of trades you are going to be taking based on the risk to reward ratios. We're going to be discussing this in the future. It also talks about how you manage a trade when you have entered the trade across the lifespan of that particular trade. Now, we'll go down to trade evaluations or evaluation system. There's a statement or there is a saying in management that if you can record it, you can manage it. Now, what this means is for you to be able to manage any business venture, whether forex, whether the traditional business, you need to have a bookkeeping system. Now, the trade evaluation system in forex is what we call the trading journal. The trading journal is very, very important to a trader. This is where you write down the reasons you entered a particular trade, how the trade went, the outcome, the result, whatever happened within entry and exit of a trade. At the end of a period, you go back to your journals to find out if you did well over time, if you made profit over time, the kind of profits you made, the trades that were profitable, what made those trades profitable, the ones that were not profitable, what made those ones not profitable. Then you try to adjust your mechanical strategy. Important things to note about a trading strategy. One thing you need to note about a trading strategy, any forex trading strategy, no forex trading strategy is 100% efficient. This is true because forex is a game of probability. There's always two sides. There are always two sides to a trade. It's either you win or you lose. So what we just do with our strategies is to stack the odds in our favor, so that at the end of the days, at the end of a week, or at the end of a trading period, we will have more wins than we have losses. So what our strategy does for us is to minimize the losses. But if there will be losses, yes, there will be losses. But what the strategy does is to minimize the losses and maximize our profits. To win, you must stick to rules of your winning strategy and apply proper risk management. This cannot be overemphasized. If you want to be consistent in anything, you need to be consistent in your approach. You can't do things differently and expect the same results. If you want to have a consistent result, then be consistent in your approach to trading. Now, I will pause and say this. 95% of traders lose money because of 6 factors, or they blow their accounts because of 6 factors. 1, inconsistent trading strategy. They jump from one strategy to another. At the end of the day, you end up having inconsistent results. 2, unrealistic trading goals. A lot of traders, you see a trader that has $100 in his account and is expecting to flip the account to $10,000 within an hour. I don't blame some of those newbies or the new traders, because this is what a lot of trainers preach on YouTube and other socials. So this has affected the psyche of a lot of traders. I believe by the end of this training, you will have a proper trader psychology that will help you become a profitable trader in the long run. Now, the third thing you need to note about trading strategies is that the only way to know a winning strategy is you must keep a trading journal. The trading journal is what tells you when you are going wrong and when you are doing things right, so that you can modify some steps and make more profit. Thank you for attending this class. In the next class, we'll be going into details on how to develop a sample trading strategy. I'm going to be showing you how I move into my trades practically and how I get those winning trades. See you in the next class. Thank you.